Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And hey, Jerry, you know, last week, Eric Sprott put out an X post, and he said, hey, if silver gets past 33, the shorts are going to be screwed. As we're taping the show here on Thursday, the price of silver has broken 33. We're currently trading up another 65 cents above that. So it's really on a tear. Gold is also up something like $40 today. I think we're around $29.70, getting very, very close to those bank calls of $3,000. What are they going to do? They're going to have to update their forecast for the rest of the year if we get to 3,000. The reason for these big gains in the market, well, we're going to get into all of that. A big part of it is the geopolitical unrest, the dollar. We have China, you know, with weak inflation numbers. They look like they're about to launch a whole bunch of QE. So there's a lot of things to get to on the show. Let's start with Canada has supposedly a new prime minister. 100,000 plus people.
We heard about that guy before.
Got in. So my question is what do you make of Mark Carney?
Mark Carney. Well, what we do know of Mark Carney, he was the Bank of Canada governor between the years of 2008 here in Canada and 2013. What I know about Mark Carney was he was the one that sold off. He was in the Bank of Canada as Canada sold off the last bit of ounces that we had left, Canada's gold. Mark Carney was one of those responsible for selling off what I call gold, our sovereignty. The gold sell-off happened. It didn't start. He didn't start it. Although he didn't start it, he didn't stop it. But it did. Our reserves did drop to a flat zero in 2016 when Trudeau came into power with Mark Carney. And his focus, it's just clearly pushing fiat liquidity, a lot of rate cuts, stimulus, not any resources, definitely not gold and silver.
So, you know, there was a post put out by Peter Schiff, and he said central banks buying gold is like insiders selling stocks. And we can see that Jamie Dimon's been selling JP Morgan stock, and Berkshire Hathaway has hundreds of millions of dollars of cash on the side. So he says when those closest to a company dump their stock, retail investors often follow their lead. When those closest to the fiat system demonstrate a loss of confidence by dumping dollars, you'd be foolish not to follow suit. The idea that Canada sold off its gold, but you have an opportunity to become your own central bank. And when you're looking at the central banks around the world who are accumulating gold, you've got to say, I got to follow the smart money here. And clearly the policies in Canada have not followed the smart money. They're not the smart money. They're the opposite of the smart money.
Mm-hmm. It's a policy of tax the people, rob the people of their wealth, freeze bank accounts. Their policy is very clear. And as the legacy media won't report on these certain things, we have to do that. That's our goal here with the Real Money Show, is to uncover these realities, these negative realities, but look at the successful part of it. You can become your own central bank. You can now prioritize your real hard work, prioritize your real wealth, measured not in these fiat currencies that Mark Carney love. They love the helicopter. The helicopter is looming right above our heads right now. They're going to go print whole hog very quickly as Jagmeet Singh. He wants indefinite EI. Call it universal basic income. They're going to crank up the printing presses. So right now, as they're depreciating our fiat currency, our freedoms, our rights, they're depreciating all of these things. We need to measure our wealth in ounces. That's the message today. We have to convert out of these fiat currencies now. I know we have this mantra of crawl, walk, run, and buy physical precious metals in your portfolio, in your hands. Get your hands on it today. If you can't hold it, you don't own it. Indeed. But right now, I'm of the opinion that the crawling is over. Maybe the walk is over. I think we should be running towards getting your precious metals in your hand, in your RSPs, and you got to do that today with Guildhall.
Definitely go through the paces. It's always good to start small and get through the paces and understand what it looks and feels like to acquire the product. The number 18778 silver, the website guildhallwealth.com. With Guildhall, you can also own physical gold and silver in your registered account. I noticed, Jerry, there was a lot of talk on X about the PSLV is being shorted massively, which is interesting because it comes on the back of Sprott saying if silver gets above 33, the shorts are in trouble. It looks like it's not necessarily about trying to take delivery, but massive shorts on the PSLV can prevent them from buying more, is what the mechanics come down to. I'll skip basically all of the minutia, and that's what it comes down to, is massive shorting can stop demand into the PSLV. Speaking of demand, though, obviously our listeners know that we've been tracking the physical gold and silver move into the United States. And something came to me just before we started recording, Jerry. It is possible that they're repatriating for that audit that may or may not come. I think it will come. I think you need that trust if you're going to have other countries invest in your dollar again. It's got to be, hey, we're going to back that with gold. That's our opinion. We think we're moving in that direction. It certainly looks like that's a remonetizing of gold seems to be in the cards. But I was thinking, you know how for the last decade, the U.S. Mint has just stopped silver sales when it's been inconvenient?
Mm-hmm. Noticed that, yeah, in a few years.
It's a story that we've often tracked, that if there's too much demand for the metal, what they do is they just stop selling, which is unconstitutional. But that's what they do. They say, you know what, we can't have this many millions of ounces being sold, so we'll just stop selling. And it's almost as if, because we know that there was a conversation with Kissinger back in the 70s about we need to stop people from owning physical metal. It's out there. You can go and read it. They wanted to make sure that you stayed in fiat currencies because that's how they can take the money, through inflation. Which, by the way, dropping interest rates, that's inflationary. I'm sorry, you're not printing. I get it, but you're devaluing, and now everything that we are importing, ex tariffs, right, which is an influx situation. Everything becomes more expensive because you're importing everything, right? So it's not good for us. Last year, gold was up 37% in Canadian dollars. That was a great hedge. You hold physical gold and silver as a hedge against volatility, against geopolitical issues, against a stock market crash. There's all these reasons to hold gold. But I'm thinking, Jerry, that maybe they're bringing in the silver because they want to actually provide that to citizens should they decide they want to acquire it.
Well,
what are your thoughts?
Yeah, if it's flowing into the United States first, so repatriation of silver, remember that most of the purchasing over the last 7 weeks into the U.S., most of it was silver. 4 times the amount of purchases went into silver. So silver is obviously very critical, strategic, very, very important right now for the United States. So it's coming into the country, and we know it's being delivered to the U.S. Mint, whose responsibility is to mint it for, first and foremost, the U.S. and the U.S. Treasury. So this is a signal to me personally, the way I see it, is a move back towards potentially and quite probably is a bimetallic standard. So we have gold, and then we have a silver-backed system. We do know how critical, how important silver is on the world stage. We talked about how much silver is used in the U.S., how much it's being imported in from places like Mexico.
I've got those numbers here, actually.
Go ahead.
This comes from Ronan Manley. In January, Kazakhstan, so the biggest supplier of silver to the U.S. during January was Kazakhstan with 482 tons, followed by Canada with 461 tons, and Mexico with 421 tons, followed out by Germany with 350 tons. That is a lot of silver coming into the country.
Exactly. You have the importance is already on the table. If it's being bought, it's important. And the silver market traded about 324 million paper ounces just this week. Just try to keeping the temper on the price. The COMEX had 80 deliveries. The LB had 1,003. That's 5 million ounces delivered in London, most likely going to India. So we know India has been a huge world record buyer for silver, as is the U.S. being importing about 18% of their imports is actually coming from Canada. Overlooked once again is Canada's resource industry, the oil industry. And an amazing article came out of the Winnipeg Sun that was reposted by Tom Quiggin this actually today. So we'll get into that in the next segment. But huge demand coming in from all over the world for the silver.
Yeah, and look, the U.S. imported over 54 million ounces of silver. So that's, in my mind, I've got to think a part of that is for mint, for public consumption, and other things. We don't know. As you said, it's a strategic metal as well. We're also at the very beginning of a bull market, and we know that because of the gold to silver ratio. We're close to 90-1 on silver to gold. You are not at a peak of a bull market unless that ratio is well below 35-1. We hit 35-1 in 2011. And so right now, the prices of the metals are showing themselves to be extremely undervalued, and that's what you want to be looking at. The number, 18778 silver, the website, guildhallwealth.com. Holding physical gold and silver is very important. You want to make sure that if you're going to get involved in the gold and silver market, make sure your gold and your silver is unencumbered. You own it. No one else can touch it. You get the serial numbers. You have access to go and personally audit your holdings, take delivery. We do all of that at Guildhall. We've been doing it for almost a decade in registered accounts, and we've been doing it since 2002. You can give us a call. We'll show you how to get involved. Exciting times in the precious metals market. I know it's a very anxious time for a lot of people. They're getting caught up in the headlines. They're watching things move back and forth. There's tariffs. There's interest rates. We don't know if the money printing's coming. We've got some headlines coming out about China. They might be printing ridiculous sums of money. But we want to look at the silver lining. And the fact is central banks continue to buy gold. Gold is being repatriated to the United States. We don't know exactly who and what. We're speculating on that. Of course, there's also the Basel III rules, which were delayed, by the way. It's something we've talked about at length on the show, but ultimately it was delayed. They're saying, okay, June, July, it is coming in. And what that means is you have to get rid of all of the paper. You've got to bring it down to an actual physical market. And so maybe that's playing into this as well. World is changing, Jerry. The world is changing, and gold and silver seem to be benefiting from that.
Yes.
And, amongst all this chaos, why not look at the opportunity? Yeah. Gold and silver are up both 15% this year in U.S. dollars. An amazing start to the year. But as we finished last segment, we said, look, the ratio of gold to silver is something like 89-1. You need 88 ounces of silver to buy an ounce of gold. Historically, it was 16-1, and if you're following Keith Neumeyer of First Majestic Mining, it's 8-1. 8-1, and we have a deficit. More silver is being used every year than can come out of the ground. Now, I'm a little ticked off because I've looked at some historical information, Jerry, and it said that Canada was the #1 producer of silver back in the early 70s.
Can you believe that?
We could be so rich. As a country, we should be rich. We shouldn't be paying taxes. But in the meantime, we feel that there's an incredible opportunity in the physical and gold and silver market. And with Guildhall, you can own it directly. You can buy it straight through our e-store at guildhallpreciousmetals.com. Take delivery. Schedule a pickup if you're in Toronto or close to Toronto. We also offer storage. If you are out west, you can store that product out west in Calgary and Brinks. If you're in the east, you can store it with us in Peterborough. Again, in Brinks, fully allocated, segregated. You get your serial numbers. You can sell on a phone call. People often ask, how liquid is it? How can I sell it? It's on a phone call. It's immediate. It's the most liquid market in the world. And you can also do this in registered accounts. We help clients not only open their registered account, we help them with their transfer if they're moving funds from another institution. We'll help them with the purchase. We'll track with them. We'll be with them. We'll talk about the markets, right? Like I've got clients who will just text me stuff all the time. You know, I'm like, okay, I've seen this one. I've seen this one. I've seen. Oh, okay, I didn't see that one. You know, it's good. It's great. You know, we have a hub of clients that are participating in the market, and they're interested, because once you're involved in the market, you've got skin in the game. You're involved.
You're tuned in.
You're tracking all of this, and it becomes an exciting opportunity.
Exciting.
I know I'm hogging the mic here,
good.
but Grady of Switzerland, come on, that guy's on a tear.
Watch that cup and handle.
We're breaking through the cup and handle charts that he's been so excited about.
So awesome.
So things are looking good in the metals. And again, if you're looking at that ratio, you understand that this is the beginning of a bull market.
Yeah.
I also liked, by the way, and then I'll pass it off because I know you've got a ton of stuff to look at here, Jerry, is I loved this idea that was put forth by the Bald Money guy on X. He was talking about gold is neutral.
I loved it. Yeah, that was a good one.
It's neutral. In other words, it doesn't care. It doesn't care what side you're on.
Left, right.
It doesn't
Red,
care,
blue.
you know, what war you want to be in, it doesn't matter. It's neutral. It is independent of all of that.
You remember that when justice was blind? I think gold and silver are the only justice, and they're still blind. They don't care if you're on the left or the right. And gold and silver, like freedom, it flees if it's not honored. Right? It flees. It just leaves. Where the freedom is not honored. And if honest money is not honored, like Mark Carney and company at ALT has done since 2016 and onward, they're all about the fiat. So we have to protect ourselves, and one way to do that is through the ownership of physical precious metals. It's an exciting time.
I'm loving the quote from Ron Paul. Gold is honest money, which is why it's disliked by dishonest people.
Right.
I think that's so true. Again, the number 18778 silver and the website guildhallwealth.com. Contact us. We'll show you how it works. We'll help you guard against inflation, guard against chaos, guard against political unrest, but ultimately profit from the coming gains to be had in the precious metals market. Would love to show you how it works. So let's talk about what you've got, Jerry. There's so much.
The week that was, really quickly, gold about 2% up this week. We're just about $13 short of all-time, of 3,000. Obviously, the tariff uncertainty, call it what you will, pushes gold within this record price of $3,000 an ounce this week. Cooler inflation data out of the U.S. CPI and PPI came out, soft, reinforcing the Fed rate cut expectations. So we all know what happens when they cut interest rates in precious metals. It's very, very bullish. The setup is very, very promising for gold, especially silver. Silver up 3% on the week, gold up 2% on the week. And in the last month, both gold and silver up moderately, about 3%. But the demand is up. And this is all coming back in light of what we're seeing in the market. There's a market meltdown that happened this week. Be prepared for helicopter money. Canada is ready to print your currency into the pits, rendering your savings denominated in Canadian dollars or US dollars at risk.
I will admit, after the stock market and all the markets were collapsing earlier this week, I found myself, I wouldn't say buried my head in the sand, but I took my time looking at the price of gold and silver on Tuesday morning.
Yeah.
I just took my time. I was like, I'll look at it in a little bit.
Yeah.
And then when I did, I was pleasantly surprised how much they were gaining strength. You very rarely see that in this market.
Yeah.
Because for years, it would be throw the baby out with the bathwater.
Yeah.
And you'd have to watch gold and silver have a V-shaped recovery and take off later. You never rarely see the windshield wipers line up with the music. You know what I'm saying?
That's true.
And it was really great to see that this week and know that we're seeing the strength in the market. But let's get back to the week.
Well, it was a clear signal. The market meltdown that we saw this week wasn't just noise, Jeremy, with the Dow and the NASDAQ sinking approximately 4%. Along with the decline of almost 7% in Bitcoin this week, it's obvious we're not dealing with just a minor correction. People, investors, the big money, Buffett, and Jamie Dimon, they have already woken up to the reality of a deepening global recession, systemic risks that are too big to ignore. This is not about just fear. It's about being ready for success. Now, today we're trying to break down what this really means for the Canadian listener, from crumbling trust we're seeing in the central banks to rising flight in gold. It's very clear that traditional investment diversification strategies are not cutting it. The policymakers run out of options. The stage is already set for the next wave. The helicopter money's coming. Massive stimulus. It just means inflation, or as I call it, destroying the fiat. Now, you mentioned Jamie Dimon, Warren Buffett earlier. They've already ran to the hills, Jeremy. They sold out at the top before this recession, this decline. And now, a few months later, we're seeing all of the uncertainties, tariffs. Jamie Dimon joined him as well. This is not over. This is really about debt, and we have to look at the real numbers. The real debt figures are 175 trillion, not 36.6 trillion. This is the biggest number. When you think about including entitlements, security, Medicare in the U.S., we're over $100 trillion in U.S. deficits. So the debt needs to be paid off, and this is why we're seeing a squeeze in the gold market, the squeeze in the silver market, and that's just it. It just reminds me of that movie in the 90s. I don't know if you remember the Boogeyman, the Candyman. If you say that Boogeyman's 3 names, oh man, you get shivers. Well, silver squeeze, that word is on. Silver squeeze 3 times, shivering for Warren Buffett. Shivering. I mean, they're sitting in cash right now.
Could you imagine if the shackles came off of Warren Buffett? Because that guy bought silver in the 90s. He ended up selling in the early 2000s, and I remember being here, and there was speculation that his silver was being used for the basket in the ETF.
That's right.
And there's been a lot of analysts reviewing the ETFs again, saying,
good,
reminding everyone that it's kind of like the COMEX. The first rule of the COMEX is they reserve the right to change the rules. And the second rule is refer to rule number 1. And the ETF is very similar. It's, hey, we can cut it off, we can hold it, we might hold product that doesn't match the table of elements. Mm-hmm. It's got all sorts of holes in it, right? Which is, again, the reason that if you're going to get involved in the gold and silver market, don't invest.
Correct.
Don't have a counterparty. Don't go the cheap route of, well, it doesn't cost me anything, I've got exposure to the market. Same thing with these ETFs. Like, they're great for crypto ETFs, but I understand, I guess, registered accounts, you can't buy crypto in your registered account, so you have no choice but to go ETF route.
The fund. Yeah.
But outside of that, why wouldn't you just own it directly? Like, why don't you just buy it? But in this case, we can actually offer physical gold and silver in your registered account. You don't have to do an ETF. There's no reason in any capacity to not directly own it. And that's the key. Mm-hmm. Because you don't want a counterparty that could take it away from you, that could stop redemptions. I remember in 2020, ABN AMRO had a gold fund, and they just sent out a letter saying, no redemptions, we're closing the account, you get cash.
Imagine that. What?
Right? These are the type of things, by the way, a company like Guildhall is so legitimate, and we could never even get away with anything like that.
Please try to poke holes.
Only the banks can get away with stuff like that.
Yeah.
Right? And I always feel like they're just preying on people, assuming the banks have their best interests at heart. Right? Like many politicians. Mm-hmm. But you might as well own it yourself. Yes. Own it directly. Have it in a way that you can go and hold it in your hand, that you can audit it, that you can get the serial numbers for it, that you can sell on a phone call. You can do all of that in your registered account. And if silver is trading at an 88-to-1 ratio and we're at past $33, cusping 30, almost getting to 34, where does the price go when it drops to 50-to-1? I mean, we're talking triple-digit silver. And that's not assuming gold climbs at another 20% rate a year just based on remonetizing it.
Right.
And like what happens if China, for instance, they're looking to print something like $500 billion. Like, that's a lot of liquidity going into the market. And a lot of that will probably go into gold. And you were right.
Probably.
Lowering interest rates, I get in a GIC, I get nothing on it. What's 1% to store my metal? right? There's a cost-benefit analysis that just starts to make even more sense when interest rates are going lower, right? It's a very, very good for the metals, and we think that it makes sense to own 10, 15% of your portfolio in precious metals, and Guildhall can certainly show you how to shelter yourself from this chaos, from potential recessions, from additional inflation, from low interest rates, from geopolitical unrest, and also the amazing gains that can be had when we start to use gold and silver as part of the solution.
Correct.
New demand for the metals and all sorts of technologies, and demand for gold to revalue and raise the balance, the asset side of the balance sheet. So Guildhall can certainly show you a lot about this market and show you how to profit well in this market and how to position yourself in the market. Jerry, let's talk about Tom Quiggin. It's a gentleman we both follow on X, and he said Canada is at a breaking point and we have no one to blame but ourselves. We have chased away industry, stifled our economy with reckless policies, and let ideology take priority over common sense. What is he talking about?
Well, this article is an opinion piece by Klein from winnipegsun.com, so check that out. Very powerful opinion piece, and it really talked about where we're at today as Canadians and where we are as a country. Canada on the verge of potential, you name it, call it revolution, call it what you will, but massive changes, and it's all happened because the ideology and the woke policies of going green has stifled our economy. We stifled our resource-rich nation. Oil, number 4 in the world for exports. Gold, number 4. You mentioned silver. We were number 1. And very briefly, this article talks about you take our oil and gas, one of the cleanest and most ethical in the world in Alberta. It has been vilified and squeezed while foreign oil from dictatorships with no environmental standards continue to flow oil into our ports. It's not about the environment. It's about control, he says. And even Mark Carney, he's prepared. His plan is to spend another $80 billion per year chasing the climate perfectionism, all while the country's economic foundation crumbles. Now, I'm just reminded about Mark Carney as he was the CEO of Brookfield. He bought oil rights in Nigeria. I didn't see any clean green policies there, but he's quick to do that here in Canada just to control us. It's all about control, and I love this article for that because it really signals to the average Canadian, if you're not awake, you're going to see this. You're going to see it happen. We need to prepare for the helicopter money because they're going to be rendering our savings.
They're threatening that in Europe, right? They're
Correct.
saying that I remember Freeland talked about unlocking savings accounts, and now in Europe they're actually looking to do it. I'm not sure to what extent that means, but the idea of wait a minute, don't take my money, right? Like that sounds like a massive bail-in.
Well, this is we have a choice to make. The choice is ours. We vote with our pocketbook, Jeremy. We vote. Listen, people, you take your money. Every single dollar you take out of the bank, they're asking, where are you going with this money? Do you know where you're sending your own money? Well, one way of doing this is converting out of your fiat outside of a fractional reserve banking system that they use to control us and converting into freedom-loving precious metals. This is what it's about.
And in the meantime, Daniel Gali, senior commodity strategist at TD Securities, posted this week. Countdown to the silver squeeze you can buy into as a tidal wave of metal makes its way into the U.S. The LBMA's free-floating silver inventories have now inadvertently drained by roughly 100 million year-to-date. That's down 33% from LBMA. The free float is now well below average daily trading volumes, severely constraining liquidity, resulting in an unprecedented rise in lease rates. As predicted by our silver squeeze thesis, we think silver markets are just starting to enter into the convex phase of this dislocation. While there are few precedents historically, such as extreme scarcities in spot silver have been followed by 1, significant strength in spot on a 6-month horizon, and 2, have seen idiosyncratic outperformance with a 10% decline in the XAU-XAG ratio on average over the horizon. Basically, this comes down to we are entering silver squeeze. Is this the third silver squeeze? The last silver squeeze sent us over $31. Now the silver squeeze is starting at 33.
It's just starting. Eric Young, King Kong out of China, says silver squeeze is back in town, boys. This time it's for real. And 100%, this is the revelation of what we've been talking about for a very long time. And this is the derivatives market that causes Warren Buffett to shiver. This is what he calls the toxicity or the financial weapon of mass destruction. We're talking about trillions in debts. This is quadrillions now of toxicity in your bank, in my bank. Everyone's bank has this stuff. And this is the revelation of rehypothecation in the silver and gold market. It means the same asset gets sold and sold multiple times, creating major risk. This is why we're seeing, I want it back. I want my gold and silver back, whether it be on the COMEX, LB. Most contracts never stand for delivery, but what happens as people are standing up for delivery, taking delivery, physical possession, and some silver contracts, according to Andy Schechtman, contracts are rehypothecated 2,000%, 20 times. Let's go. We're going to see where we're going to head, but the silver squeeze kills this derivative market. It is the solution. Silver squeezes on, and silver is the Achilles heel for the corrupt financial system.
And definitely the major banks know what's going on, and they're probably jumping on the back of this too, right?
Galleys with TD Bank.
Right. You know that JP Morgan is acquiring for themselves as well, most likely. I mean, that's speculation. But, ultimately, look, you've got home insurance, you've got car insurance, you've got life insurance. This is the time to consider having an insurance policy for your wealth. And physical gold and silver are negatively correlated to the dollar. You're invested in things that are invested in Canadian dollars. You're invested in things that are based off the US dollar. Gold and silver don't care for currencies. They don't do anything, but the currencies fall. And so with that coupled with the paper market, what appears to be in the midst of destruction to its purity, you have an opportunity to have that insurance policy pay out. So this is a good time to consider having 10, 15% physical gold and silver in your portfolio if you haven't done so already. And remember, the ratios are showing you that this market is just getting started. You can follow us on X and see, Grady out of Switzerland, and look at the charts and see how it's just getting started. You look at the supply-demand fundamentals and you can realize this is just getting started. It is not too expensive for gold or silver when you think about all the debts in the world. There's $300 trillion in debts, and all of these assets need to be revalued much, much higher. They've been kept down to keep you out of them.
That's right.
And now you have an opportunity to have your purchase actually make an effect.
And mark our words, we are not at the peak. This is just the beginning.
The number, 18778-SILVER, the website, guildhallwealth.com. You can buy it direct. You can have it stored, physically allocated, segregated in a depository, or hold it in your RSP, TFSA, Lira, LIF, RIF, physical, allocated. Get that inventory report. We'll show you how to do it. Again, it's 18778-SILVER and the website, guildhallwealth.com. It's all about real money, gold and silver. They've been money for thousands of years. They store value, and everything old is new again. And we are having a resurgence during the golden age, and things look chaotic and things look like a tornado, but ultimately gold doesn't care. Silver doesn't care. It doesn't have emotions. It's literally just sitting there saying, you need me for industry, for silver, and for gold, it's saying, you're going to need me for trust. And you're going to need me to revalue so that your asset side of your balance sheet looks good, because you're going to have to deal with these debts somehow. And if you're going to get the economies going, which I believe we will get to a stage where Canada will be doing great, the U.S. will be doing great, and in that case, you're going to need silver for all sorts of things. In the meantime, let's enjoy the bull run, Jerry. Forecasts. Tell us about some of these recent forecasts we've got.
We got two new forecasts this week, albeit conservative ones. Usually these institutions are on board with some bullish runs that are coming up, but we have some conservative ones. Macquarie analysts, gold set for a record 3,500 amid U.S. deficit concerns. Macquarie Group analysts led by Marcus Garvey, not the Jamaican Marcus Garvey. He forecasts gold could surge up to an unprecedented 35. Then you have UBS gold hitting 3,100 by year end. So obviously everyone's jumping on board. This train is about to take off, and this train is a coiled spring as well, ready to be launched to the moon, Jeremy. Gold and silver ready to go because the helicopter money is underway. They're going to be printing, and we all know that is inflationary, depreciating our currencies. And this is why you want to get a reserve set up for your financial future, because your reserve must be decoupled from the financial madness that's coming up.
And by the way, $3,500 gold, right? Which, I mean, that's not necessarily conservative. It's pretty good for this year. At 80-to-1 silver to gold ratio, which is where we've been for the last several years, that puts silver at 43.75.
We've seen that before.
Over $43 an ounce.
Mm-hmm.
And I believe once you hit over those $40 ranges in silver, $50 in psychological terms feels inevitable. And after that, where do we go?
Yeah, we will definitely see Exter's pyramid play out. The participation in the market is going to rapidly cause silver and gold to propel higher. But, overall, we talk about peaks. People are worried about that. I'm buying today for the first time. I'm really worried about this market. I'm buying at the peak. I'm buying at all-time highs, Jerry. But it's not really for silver, but more so for gold. We have seen $43 silver. We've seen $49 being the high. We're going to blast through that as we have escape velocity breaking through for gold. This is going to propel us higher. But, gold and silver, especially silver investors, know that in a precious metals bull market, the gold to silver ratio declines. And right now at 90-to-1, 89-to-1, this proves to us that gold right now and silver, precious metals, are not currently in a bull market. We will be as soon as that ratio starts to tighten from 90-to-1 going down to 80 to 70. That's when the bull market begins. So ladies and gentlemen, you still have a lot of time. Look to squeeze that silver market with us. Every single ounce counts, and every single ounce puts some pressure on those toxic derivatives that we Canadians want to get rid of, and we Canadians have enough silver to do so. So you want to give us a call, 1-877-8-SILVER, the website guildhallwealth.com, guildhallpreciousmetals.com.
Keep going, Jerry. You're on a roll. Keep going, buddy.
Why
Keep
not
going.
some silver maples? We got these monster boxes in stock. If you believe that you need some legal tender on hand, barter and trade potentially, this could be for you. You want to get your hands on some silver maples to crawl with those to begin, and then get up to 100-ounce bars later on for your RSPs. But talking about Canada, Jeremy, we know that Canada is a resource-wealthy nation. The loonie was considered a commodity-driven currency. We're no longer a commodity-driven currency. We have thrown the oil industry aside, silver industry aside, for the purpose of green technology and green tech. I love silver. I love green tech. I love AI so much. I mean, not so much, but I like AI. I like solar panels.
Have you ever fought with your AI?
Oh, yeah, pretty much. I've been doing a lot of that recently. Okay. Debunking them, in fact.
Oh, interesting.
Yeah. But, Canada right now, we are a major supplier of silver. 18% has been going into the U.S. According to the USGS, U.S. Geological Survey, U.S. imports around 18% of its silver from Canada, roughly 882 metric tons. We know silver plays a vital role, 5G networks, electric vehicles, antibacterial properties if you're into health. We know colloidal silver. Silver demand is rising fast, especially renewable energy, and year over year, 5-6 years straight deficits. Nothing coming out of the ground. We know this. And we are positioned as a North American hub for silver once again. If we could just unlock that wealth from the ground, we will get there. All we need to do is start recognizing it, and recognizing silver as a critical mineral that will also give Canada tools to support its silver development, including faster permits, strategic partnerships. Let's get this underway. Let's get the wealth into our hands, because this is what's going to happen. Because as soon as we squeeze that market, which is what's happening, it's going to be life-changing for your portfolio. We will improve your portfolio multiple times just by getting to set it and forget it metals, gold and silver for your future.
Yeah, look, we're pretty excited. Silver breaking 33 is a big deal in this market. And for silver to be breaking 33 with all of this imports from the LBMA and the pressure that they're under to deliver physical product when we know that there's been this paper shell game going on is just even more exciting. This is seeing Ted Butler's work come to fruition. This is seeing so many of our beloved analysts that we follow,
Jim Sinclair,
telling that this was what is going to happen. And it's exciting to see. And helps us to even further believe where the market's going. Now, we don't know where it's going to ultimately go price-wise, but we know that it's incredibly undervalued now, even at all-time high prices. But remember, all-time high prices are matched with all-time high printing. The amount of money that has the cash that's been printed. We have a historic bullish setup for silver, and we couldn't be more excited for people to start to get involved. You can own it directly. Go to our e-store, Guildhall Precious Metals, and you can buy a tube of silver maples, an ounce of gold, and get started. Get something in your hand. You will have an aha moment, the likes you've never seen. It happens to everybody. They go, oh, I get it now. I understand it. You can hold it in a depository account for ease of liquidity, have it physically stored, secured. Don't worry about the violence and stuff that's happening around you. You know that you can sell it on a phone call. This is fully allocated, segregated. You get the serial numbers, go and visit your product. Take delivery anytime. Or have it in a registered account. This is the best way to go. Insulate your future. Insulate your retirement. Give yourself a chance to make a lot of money and increase the wealth in that portfolio. Hold it direct. Have it owned outright. No counterparty risk. It's unencumbered. It doesn't get better than that. And there's nothing else. Can you own a house in your RSP? I didn't think so. Can you own coffee, physical coffee in your... No. Can you own physical oil? No, you can't own anything physical in a registered account, but you can own physical gold and silver.
Awesome.
If you've missed a show, catch us on YouTube, catch us on Spotify, catch us on Rumble, follow us on X. There's a lot of information going through on X. The number 18778 silver, the website guildhallwealth.com. Jerry, thank you for joining. And thank you to everyone who joined us this week on The Real Money Show. We can't wait to speak to you next week. You've been listening on AM 770 Calgary and AM 640 Toronto.